industry, right? Because you can have, for example, like a photographer, right? We know that the range of cameras out there, yeah, it's endless, right? We know that you can have really high-end cameras versus very basic cameras, but I think it's easy. You can argue that a photographer to perform their best, it's not based on the camera, but it helps to have a really awesome camera, right? So you can have a photographer who buys the highest end camera when they have 0 clients, but still it relates directly to their industry, right? So remember that baseline test, ordinary and necessary is the requirement. And the reason I say that is because the biggest thing that nobody wants to undergo is an audit, right? So if you are ever audited, yeah, right, by the government, they will run through basically line by line, right? Okay, so give me a breakdown of your travel expenses. Give me a breakdown of, like costumes. What does this mean? And then the catch-all, miscellaneous. Like, we love that category, miscellaneous. We just dump everything and anything in there, thinking that it's just gonna, pass on, but they will look into that stuff, right? So if that time ever does come, you are audited, you want to be able to stand in front of them and show them that this expense was ordinary and necessary, okay? So use that baseline. Question.
So does that equate to like keeping all of your receipts, or like having like a journal with the receipts and
Right.
notes of like
Mm-hmm.
when you used it, the date you bought it, like what gig it was for,
Sure.
all that kind of stuff?
Absolutely.
Okay.
So the question relates to supporting documentation for expenses, right? I will get to that question next, but that's a great question. But just the baseline is, yes, you want to have supporting documentation, and I'm going to go over a few tips on what are some good best practices or best methods to track those expenses, okay? So we will go over supporting documentations like business receipts and things like that, okay? So going back to what expenses are considered deductible work expenses, then it's anything, like I said, ordinary, necessary, and I have a few here, like job search expenses. I know there's application costs when you are applying for a performance or a gig. Those are deductible, right? Because those are ordinary and necessary, right? If you think about it, you need to pay that fee, right, in order to get a job or a performance, right, a role. Something like education expenses, continuing education when you go to a seminar, fees that you pay to CVAC, right? Those are tax deductible, right? So quick shout out to CVAC here. Those are deductible because the information and the workshops that the CVAC and a lot of these organizations provide is directly related to your job, right? It's directly related to your livelihood, so you can definitely deduct those, okay? Travel expenses. A lot of times you'll be traveling to New York, to San Francisco, to different, places to audition. Those are deductible as well, okay? So airfare, train ticket, bus ticket, just make sure that when you are booking those modes of transportation, don't get first class. Keep it reasonable, right? Ordinary, necessary, right? That necessary baseline, right? You aren't, flying business class. It's not really necessary, right? So keep it reasonable, right? You never want the expense to be shown up as being extravagant. Okay. Question.
What will happen if you don't have the documentation?
So the question was basically related to documentation. Let's say you do go through an audit, right? And you don't have that paper receipt or you don't have support for that expense. It'll be non-deductible, right? So it's a scary thing. They'll disallow the deduction, basically, right? They'll be like, where's the support? If you can't support it, then you can't deduct it. That's what they're going to say, because if you can't produce some kind of evidence, how can they ever know it really, like you actually...
They'll charge you a penalty or just
Right. Exactly. So basically, if you have an expense reversed out, basically your net profit will grow, right? If you think about it, your deduction will, as your deductions get smaller, your income will go up or your net profit will go up, right? So your tax or your estimated tax that you should have paid or you paid will go up as well. And there will be penalties and interest related to the unpaid tax, right? Or late payment of tax, okay? And that's a scary thing as well, because they might audit you 2-3 years later, right? And that interest is accruing, right? If they disallow a deduction or an expense, then those 2-3 years, though you were, though you actually thought you paid the right amount of tax, they're gonna tack on interest and penalties for late payment of taxes. Okay, so it's a scary thing. It definitely is a scary thing. You do not want to fall into that. So, going to it directly, thank you for that. The lead in is documentation, right? Supporting documentation. What are some best practices to track your expenses, right? What I always tell is when you get into the industry, open up a business credit card. You know, a credit card account or a checking account if you have the cash available, a debit account, to track and run all your, your singing and your performing expenses through that one account. The reason why I say credit card account is because travel is a big part, right? Travel is a big part of being a vocal performer, right? Vocal artist. So you want to find a credit card that gives you travel rewards or travel points, right? And I know there's a lot out there. There's a lot of great websites. Like I think it's like the Points Guy is a big website out there where he examines basically. It's a website where he compares credit cards and the rewards and how to basically hack or play against the credit card companies, right? How to utilize their reward system against them or to maximize your rewards, okay? So the Points Guy, I think that's the website name, the Points Guy is a big one. And there is a credit card out there that's pretty good. I actually use it. It's the Chase Sapphire, right? And I think you get double the points for everything that you book. If you get the reserve version, it's 3 times. Every dollar you spend, you get double the points or triple the points. And for travel, okay. And what you can do is basically book everything, all your travel, all your expenses through that account. Definitely, I recommend paying off that account. As you get paid, don't let it accrue too much. But you definitely want to be able to, you don't want to miss out on rewards or points that you're eligible for, right? For expenses that you're going to be making anyways, right? So first tip is open up a dedicated business account, credit card or debit account for your business expenses to track them. Because at year end, if you've been doing a great job of tracking them and running them through one credit card account, everything's there. Everything is there. And nowadays with electronic statements and online banking, why hold on to paper receipts? You really don't need to, honestly, okay? The one area that I do recommend holding on or having a paper receipt is big expenses, really large expenses that you didn't use your credit card or your debit account or anything like that. What I would do instead of holding onto the paper receipt, take a picture with your smartphone of that receipt, okay? And the reason why receipts are important is because what the IRS is going to want to know for that expense is date, time, purpose of the expense, right? Who was there, basically if you are, hitting or expensing meals and entertainment expenses, right? Hitting that account, okay? What you need to record basically is, let's say you bought someone dinner. They're going to want you to justify how is that business related, okay? That dinner that you bought someone, is it a client? Is it for performance? Was it during travel, right? They want you to have a log of that stuff, okay? So the nice thing about our great phones that we carry around with us everywhere is that when you take a picture, the date and the time appears. There's like a log of when you took that picture on your phone, right? You know what I'm saying? So like it's there. But also the receipt, as long as you take a clear picture, it will also show the date, the time, right? The amount, right, of that receipt. So what you want to do, you don't have to track paper receipts or hold a file or a box. Just take a picture with your phone, store it in the cloud, and have it at year end or when the IRS comes knocking, right? They're asking, give you some support for, this category. So take a picture with your phone. Question?
So I've got a couple
Sure.
tuning into the live stream.
Great.
And there's a couple related questions.
Okay.
One is, can an email count
Mm-hmm.
as documentation?
So the first question, can an email count as documentation? Yes. Okay. What type of, I'm trying to figure out what would be an email receipt? Like what is an example?
Voice lesson, if you
Okay.
if you had like an email from your teacher about payment or something.
Maybe you paid it in cash, maybe, and then.
Sure.
Got an email
Even
receipt.
like
Uh-huh.
Venmo or like some sort of electronic receipt.
Sure. Yeah, so Venmo payments or payments that, let's say you paid to a teacher or a coach, yes, that's all documentation, right? There's a date and a time. The important thing is date and time and purpose, okay? Because the reason why date and time is so important is because you can only deduct expenses in the year they incurred, okay? So what I mean is if you had an expense that you didn't deduct last year, you can't carry it forward to this year, okay? So you want to be able to, you only can deduct expenses in the year they occurred. So January 1 through December 31st, that is the year, okay, as individuals, okay? We are on the calendar year as individuals, okay? And we're all talking about individual taxes right now. We're not talking about corporate. We're not talking about anything like that right now. So we are all on the calendar year, okay? So that's why date and time is so important. You can only deduct expenses in the year you incurred them, and you can't save them and do them in a year. So another question is basically, let's say you're just starting off, right? And your expenses are a lot more than your income. Or let's say you have no income, you only have expenses, right? What I would, right? You know, that happens, right? Yes, you only have expenses, right?
So real.
So basically, by human nature, you're tempted to just save those expenses and be like, okay, I'm gonna deduct these expenses when I have income, right? That's the thinking, right? But what I would recommend is don't do that, do it the legal way. Report it on the Schedule C, which I'll go over soon, in the year you incur that expense, and carry that loss forward, okay? You know what I'm saying? So when tax time comes along, when you're filling out your 1040, your individual income tax return, report those expenses, even if you have zero income. Your loss, you can carry it forward or back, but you're gonna carry those forward, okay? So you just have to report them. If you don't report them, you forfeit those expenses, okay? So do it the legal way. Report your losses, report your no income, you know, and then carry those losses forward, and then use them in the year you have income, the right way, okay, the legal way, so that you know, the IRS can't really argue with what you're doing, or you know, when you show them receipts from 2 years ago that you deducted in the you know, in the current year, they won't argue with that then, because you did it the right way, okay? Any other questions with that?